The UK gilt market is on track for its worst week in months as the budget rattles investors. Welcome to Market Insight, I'm Ramzan Karmali. Short-term British government borrowing costs are heading for their biggest weekly jump in over a year, while the pound faced its longest stretch of weekly losses in 6 years as Labour's tax and spend budget raised inflation expectations. However, today, yields dipped and sterling did edge higher. So is investor sentiment calming? Well, to help answer that and more, I'm joined by Aoifinn Devitt, Chief Global Market Strategist at Moneta. Aoifinn, thanks so much for joining us. So what have you made of the market reaction to the budget? Is it justified and does it appear to be calming down now?
Well, I think what we were first looking to is whether we would see a repeat of the reaction to Liz Truss's economic plan at the end of 2022. Clearly, we didn't have that massive crisis of confidence that was seen there. And initially, things were quite calm, both in the fixed income and in the equity markets. We do always expect more volatility in fixed income markets today, simply because there's so much of a focus on central banks. And we've seen that in the US as well, that we're just seeing more of that fixed income volatility, while equity markets seem somewhat immune to what's going on in geopolitics as well as domestic politics. They're really focused on fundamentals. So in the UK, initially things did look calm. And then it started to look again that simply, even though inflation was going to be heading towards 2%, a little bit higher, 2.6, 2.5 in the years to come, we saw economic growth was going to be positive. So we're well out of the technical recession fray that we had been in the UK very briefly with 2 consecutive quarters of negative growth. We're in positive territory, albeit around 1%. So all of that is middling news. It's not bad news. It's not good news. And initially markets were calm, but now the jitters have been appearing this week. Again, is it a crisis of confidence in UK politicians and a little bit of muscle memory from the Truss era? But it seems, let's see what happens. It's too early to say whether this jitter phase is past.
So what does this all mean for policymakers at the Bank of England? A 25 basis point cut seems a certainty when they meet next Thursday. But after that, is the picture not so clear now?
It is, and that's probably why, as you mentioned, borrowing costs have risen to that degree, because that's actually very similar to what's happened in the US, that same pattern. Clearly, we need to be able to stimulate growth. Growth at 1.8% or thereabouts, between 1 and 2%, is nothing to write home about. There needs to be the ammunition that a central bank has to stimulate spending, stimulate borrowing. So I do think that they will continue along that softly trajectory around cutting rates. They will be data dependent and careful not to shock markets. But what we can see is that markets have very little tolerance for any kind of confusion or lack of consistency between fiscal policy and monetary policy. So I'd say that politicians need to tread extremely carefully, as does the Bank of England.
Now, overall, European and US equity markets have had a pretty rough week. What's to blame? Is it uncertainty about next week's election?
Certainly, there's been a bit of a change in the tide around next week's election. Some of the betting odds have changed. We've seen just a movement in some of the momentum around both campaigns. It's also probably recognition that markets had run up a little bit too much around AI. The interesting point today is we're seeing decent earnings, very strong demand, indicative and strong sense that the investment in AI by these big tech companies is very much paying off. I suppose where the jitters lie is that we don't know the shape of that demand from corporate spending. That we're seeing it, and certainly expectations have been managed very well around earnings. So these companies are beating earnings, but probably just a little bit of profit taking. It's going to be a nasty few days in terms of uncertainty and rhetoric, and probably battening down the hatches and wait it out till after Tuesday.
Well, you mentioned earnings there. What have you made of the results we've had so far from the Magnificent Seven then?
Well, it's interesting. Of course, Meta was the one that it probably has been the most disappointing, and a lot of demand pattern shifting there. We see a little bit of shift in consumer behavior, advertising revenues not coming through in the way they said they would. However, the other company we've seen, Google and Apple, we've seen a very strong demand there. This, as I said, the investment in AI definitely seems to have been a bet worth taking, and a lot more of that to come. Consumers still grappling with how AI will change their life, change their behavior, and change their work-life balance, essentially. So I'd say that all said, expectations have been managed very well. They were actually very low. They were not very demanding. So to show this positive surprise, really not a surprise at all.
Aoifinn Devitt from Moneta, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.